Hey guys, welcome back to our channel where we are passionate about helping people with business and accounting. In today's video, I want to talk about the ERTC credit, also known as the Employee Retention Tax Credit, also known as ERC credit. I have not issued an updated video on this credit because honestly, I was waiting for guidance to be issued by the IRS. I wanted to give myself some time to review what they've issued. I wanted to give my team some time so we can chat about it and make sure that we're doing right by our clients. So if you're interested, keep on watching. So like I've mentioned in previous videos, this credit isn't something new. It's, been around since March and we really didn't talk about it much, and you guys know why. We had PPP and at the time we couldn't take PPP and ERTC, so we all focused on PPP. Well, now in December, 3 days before year-end close, President Trump issues, all of these changes to the program, and now we can go back in time and get the ERTC credit. Whew! So what is this credit? This credit is basically relief for employers who kept employees on payroll during the pandemic. To be eligible, you have to file 941s, or depending on your business entities, a 943. So you have to have W-2 employees on payroll. Now, if you don't know what a 941 is, a 941 is basically a payroll return that is filed to the IRS. It's a reconciliation of Social Security and Medicare taxes. So for every business that has W-2 employees, you're required to file a payroll report every quarter. So eligibility for the ERTC credit is basically, it's very simple. To be applicable for the credit, you were either shut down by a government mandate shutdown, or you had a reduction in gross receipts. Now, 2020 and 2021 rates are completely different. So in 2020, you had to prove that you had a reduction of gross receipts of 50%. In 2021, that number has changed to 20%. So basically, in a nutshell, all of these changes happen, and now we as employers can take PPP and ERTC, but not at the same time. So you can't double dip. You can't take ERTC on the same payroll as PPP and vice versa. So just know that you have to separate the payroll for each program. So now we're going to get into the technicalities of the program. So let's say you had a reduction in gross receipts. So you're always going to compare from 2019 to the quarters, okay? So you had a reduction in gross receipts in quarter 2. You are then able to qualify for quarter 3. But as soon as your income is restored back to 2019 numbers, you can no longer take the credit. Now in 2021, that kind of resets. And so if your income was restored in December and fourth quarter of 2020, but then you had a reduction of gross receipts of 20% in the first quarter of 2021, then you can apply for the credit. I highly recommend you work with a professional that can help you with these calculations, because guys, they're not easy and they're not as straightforward as we're making them appear to be on camera. There's a lot of calculations that go into this. There's a lot of information that needs to be known. So for example, related party individuals. If you own a company and it's you and your son, well, you cannot qualify the payroll for your son because it is a related party. So you need to know a lot of the ins and outs of this program, which is why I would recommend you work with someone to help you with this process. And along those lines of qualifications, you also need to know that not all employees are eligible for the credit. So one thing that I don't think is talked about very much is that you have to have the employees that you can use for the credit have to be full-time equivalent employees, which I believe is 30 hours or more on payroll. So just keep that in mind. Make sure that you are only taking the credit for your full-time equivalent employees. Before we go any further in this video, please consider subscribing to the channel. It means the world to us. It helps us continue to provide valuable information. So please hit that subscribe button. Give this video a like if you like what you're hearing so far. And let's get back to the video. Now, the next thing I want to address, and is something that is very controversial or no one can agree on this item, is S-Corp owners. So if you own an S-Corp and it's just you and you file your payroll taxes, are you eligible for ERTC? Well, the answer is it's not clear. They did not address it in the new guidance that was issued on March 1st, which is very frustrating. That's actually what I was waiting on to file a lot of these amended returns for 2020, because I wanted to be sure that my business owners can actually qualify. So I'm gonna take you guys to the guidance real quick because I wanna talk about this because there is so much uncertainty regarding this question. I want you guys to be able to formulate an opinion, and then I'm gonna give you my opinion. So when I pull up the guidance on page 3, part A, it says claiming the employee retention tax credit and assessing funds in anticipation of the credit. So an employer that is an eligible employer as defined in section 2301C2 of the CARES Act. So I'm gonna throw that on the screen. So an eligible employer means any employer which is carrying on a trade or business during the calendar year. Okay, so now let's go back to the IRS guidance, which says, so now we know what an eligible employer is, and pays qualified wages. So you have to be eligible, so you have to carry on a trade or business, and you have to pay qualified wages as defined by section 2301C3 of the CARES Act. All right, 210C3. So what is qualified wages? Okay, so qualified wages. The term qualified wages means in the case of an eligible employer for which the average number of full-time employees employed by such eligible employer during 2019 was greater than 100, wages paid by such eligible employer with respect to which an employee is not providing services due to circumstances described in the subclause. So basically in this section, we're saying qualified wages have to go to full-time employees. And then the IRS guidance continues to say, is entitled to claim the employee retention credit against taxes imposed on employers by section 3111A. Is just the Social Security tax. That's all they're saying here. So after these taxes are reduced by any credits claimed under these rulings, eligible employers subject to these taxes are entitled to take the employee retention tax credit. Great. Okay, so now we've covered, who an eligible employer is and what qualifies the wages. Then we go down to page 5, which just talks about the eligible employers and they have to file their employer quarterly federal return, so the payroll return. Now, page 7, section B. So an eligible employer is any employer carrying out a trade or business during the calendar year, which we saw that on the CARES Act. And then 1 is an operation of the trade or business that is fully or partially suspended due to government mandate, and then the decline in gross receipts. Page 9 goes further to say that the permit of an employer that received PPP, so if you receive PPP, it's retroactive, you can go back and claim ERTC. Okay, so this next section is where we get into why people are saying that owner employees are not eligible for ERTC, and some people are saying they are. I will give you guys my opinion, but let's look at the document and you can generate your own opinion on this. So it says section 2301E of the CARES Act also provides that rules similar to the rules of section 51I1 of the code relating to work opportunity credit applies to the purposes of the employee retention tax credit. So they're saying that this code, this part of the code, also applies to the employee retention tax credit. So section 51I1 provides that wages paid to related individuals, which within the meaning of section 51(1) may not be taken into account for determining the credit under section 51A of the code. Accordingly, wages paid to the related individual may not be taken into account for determining qualified wages for the employee retention tax credit. So if we go down to the tax code and we go all the way down to 51I(1), the title, the heading is related individuals. So Part A says, related individuals, no wages shall be taken under account under this section with respect to an individual who bears any relationship described in paragraph A through G of section 51D2 to the taxpayer, If the taxpayer is a corporation, okay, to an individual who owns directly or indirectly 50% in value of outstanding stock. If the taxpayer is an entity other than a corporation, to an individual who owns directly or indirectly 50% more of the capital and profit interest of the entity. The wages in question here are not the S corporation owner's wages. It's the related individual, related party. So if we Google related party, the term related party refers to or deals with an arrangement made between two parties who are joined by pre-existing business relationship or common interests. All right, so now let's go back to the IRS guidance. They keep saying related individuals. I don't interpret that to mean the S corporation owner. So accordingly, wages paid to related individuals may not be taken into account of determining qualified wages for the employee retention tax credit. So there are so many varying opinions on this 50% ownership. Honestly, guys, you're gonna have to work with someone, and you might call someone and they're gonna say no, as an S corporation, you can't take this credit. You can call another firm and they'll say, yes, you can. And the reason why is because a lot of this is interpretation of the code. It's interpretation of the guidance. And if you think I'm an S corporation, I'm not a related individual, I can take this credit, and you take it, the IRS can come back and release further guidance after you've already filed your amended report, 941 report, and then they say, sorry, you can't take it. That is a risk when you take this credit. Honestly, I feel very comfortable saying that S corporation owners can take the credit. The way I'm reading the guidance, the way I'm interpreting this information is, yes, S corporations owners can take the credit. Now, you can't take it for your related party individual. There are other factors to consider to see if you would qualify, like aggregation rules that came out with this guidance. So it's not as simple as, oh, I'm an S corporation owner of this business, I can take the credit. You should talk to someone. You should make sure that you are providing all of the information to the preparer that you're working with, to the professional that you're working with, so they have the information that they need to provide guidance to you. I shared a lot of information on this credit, and I have been holding out on you guys because I really wanted to make sure that I understood what I was reading to be able to communicate it clearly. I hope you found this video helpful. If you did, please give it a like, subscribe to the channel if you haven't, share it with a friend, and I'll see you in the next one. Bye.